All right, welcome to our Homebuyer Seminar. I'm Bill Gross, along with my friend and colleague.
Gustavo Segura. Hello, everybody.
We get together every Wednesday at 4 p.m., sometimes 5, to talk about home buying process, whether it's your first home or trade-up home. We're here to help you with it. So, Gustavo, what's happening in the marketplace?
Yeah, last week we had a really good week with rates. Throughout the week, we got more and more information, right? That the Feds aren't going to be raising. I know they're not cutting the Fed fund rate, but that was okay. So we still got very good information. But then all of a sudden, the job report on Friday kind of knocked us down a little bit. So the job report made it seem like we have a strong economy still, which needs to slow down. And as a result, the market reacted to that. So the rates, took a little dip between Friday and now, but we're still at a very good point because we did have a good run up into those numbers.
So the economy's too good. Not enough people have lost their job, and not enough businesses have gone bankrupt to satisfy the Federal Reserve to allow rates to come down.
Yeah, and for investors and for Wall Street to feel comfortable, So if they see
Right.
that there's still a strong market, they're going to adjust. Even though, some of that stuff is seasonal. Some of those things are retail, coming off of December. So there's a lot of things in there, but still, report comes out like that. It shows strength, and they're still worried that the next meeting in March that we may have the Fed raise it, although they've said that they're not going to. So I think it's still we're still at a good path. I think slowly here as we go into February and then of course into March, we will continue to see a downward trend, especially as more and more data comes out.
Yeah.
Yeah.
Well, and I think it's still an active market, and I think
Yeah.
that's the key. No matter what we do, if the rates are where they are, there's people looking to buy properties, and that's what we're looking for. So,
Yeah.
may not be as much as the government wants, but it is what it is.
Yeah, exactly. And I sent you a quick little chart. I think it shows again the home ownership aspect of building wealth, investing in your future. As a homeowner, you buy a house, you hold on to it there. The average person lives there from between 7 to 10 years. I'm on 9 years at this house, so I'm on track for that. And when you look at the year that you bought it based on the market, this chart shows a really good view at what the gain was for those individuals that bought that house. So if you have that chart, that'd be great to show so that people can see that owning real estate has always been a good opportunity for you hold on to that. Yes, they have markets like the 2008 market, but that's just 1 time, 2 years, somewhere around there. The rest of the time, it's always been a good investment for people.
I'd love to pull up that chart. Let's see here. Oh, there you are. It went to spam. That's no good. Not
Yeah.
spam. Okay, well, we don't want you in spam folder. That's for sure. There you are. Okay. So let's put this over here. And let me share the screen so you can kind of share this a little bit here. 1 second. Sorry, a little slow tech. Our producer's off today, so there you go.
Yeah, so if you zoom in on that one a little bit, we can see that, throughout the 5-6 decades here, if you buy a home, like I said, you're holding it for 7 to 10 years, you've had an appreciation. Now, we just used a number here. We have a number here that our friends at MBS Highway use. Let's just use $100,000. So if you bought a home in 1980, and you held it for 10 years, it was about a 78 appreciation during those 10 years. Whether your house was 100,000 or whether you bought a house for 300,000, they're looking at about an average appreciation of about 78% for 10 years.
So that's why it doesn't show
Beyond
past 14, because it's 10 years through 2014 to 24,
Yep.
it would have got 90%. Your money would have doubled. Your $100,000 would be worth $200,000 today.
Exactly. So, and that's, and I can tell you this, that is, we bought our home here in 2014. So like I said, I'm going on almost 10 years, and that's exactly what happens. We are doubled for sure where I'm at. So this is one of those things that allows people to see, look, you buy a home, you hold it for that 5 to 10 years, you're going to have some positive numbers here. Now, where it's going to be, is still to be seen. But even if you're getting 20, 25, 30%, that's great. You want that in an investment.
Well, we know that people who bought as late as 2022 have already seen positive appreciation on par with some of these years, or ahead of some of those years. So definitely seems to be a good number. Oh, that's
exactly. And
okay.
When we look at the ones that were negative, it was 2006 or so, and single digits. We also got to think about what happened to Wall Street during that time. So
right.
It's like, yeah, maybe you lost 3% there or 5% gain, only 1% in a 10-year market. But what happened to people that had stocks and bonds and all that during that time period?
The answer is they lost a lot of money on one of them.
Exactly. So being able to hold land and hold it for a while, it's been key, and it's something that we all need, right? We all need shelter. So it's holding a bond and a stock and all that, that's a luxury. It's an investment luxury. But as far as housing, you're either going to rent or you're going to own. So might as well get into that ownership and also benefit from appreciation over the next 5-10 years.
Very good. Okay, so buying house, we know, is in the long run a great strategy.
Right.
Of course, the key to doing that successfully today is hard work and preparation. I think if you follow my podcast at all, I constantly take the task the news, because they make us sound like, oh, well, the market's not ready or the rates aren't complying. But the answer is, at every stage, if you have the money and the income and the drive, you can buy a property and over the long run make money, but you have to earn it. And one step in earning it is getting together and getting a game plan together financially. How much you can put down, how much can you afford, how much you're going to borrow, who's going to get the money to lend to you so you can move quickly and efficiently to make your offer get accepted.
Yep, exactly. And I know it's still in it's still in an active market, and prices are staying high as far as the home values. And people, there's two sides of looking at this. For the buyer, they're saying, oh, it's expensive, it's getting out of hand. But for the homeowner, it's a great opportunity, right? They're like, hey, my property value is going up.
Yeah.
Sometimes I listen to the news and I hear how that's a bad thing. They're like, oh, home prices are going up, that's crazy. It can't last forever and all this. And I've heard somebody compare that to the stock market. Why is it that in the stock market, when stocks go up, they're like, yeah, that's great, for everybody. Stock market and stock price is doing great. But a lot of times when they focus on real estate, they make it seem like it's going up, but it's going to come down. They focus more on the negative side of it. And home ownership, appreciation, it benefits a large percentage of the U.S. population. I know it's tough to get into one if the property is going up, and especially on a rate environment right now. But ultimately, I think it's something good that shows that there's strength in the housing market.
Yeah, it always does feel odd when they make it sound like it's a bad thing. The housing prices went up and they're rooting for values to go down.
Yeah,
people will be hurt in a sense that own value and are retiring on the value of that property. And so sometimes I feel like the news is telling you the exact wrong thing. Yeah. Even with stock, to be honest, for example, I buy stock through my real estate company, and every time that I close a deal, I take a percentage of my income and buy stock. And so if the price was higher, I'd get less shares. I'm not going to sell the shares for 5 or 10 years. So I don't care what the price is today. I care what the price is going to be 5 or 10 years from now. And so the fact that the price is down makes it easier for me to buy.
Right.
So it's not good for everybody that stocks are up. It's kind of not so good for me in some regards, though I also have a stock portfolio. So, but at the end of the day, I think you're right that many people are affected by the value of prices, are happy they've gone up and hope they stay up. Maybe go up gradually, not dramatically,
right?
But still hope they go up.
Yeah.
Okay. Well, let's see. What do you see activity-wise? people applying for loans getting pre-approved, or is that slowed down, or where you see?
No, yeah, I'm still seeing that. I think you know, they got a hold of the news as far as, you know, rates coming down a little bit. I've seen a little bit of activity on the purchase side, also too on the refinance side. So, you know, now I just closed the refinance, which is at 6% on a cash out. You know, so we're talking on someone with good credit, not excellent, but just good credit, being able to refinance. And I think people are hearing a little bit more about, hey, it's definitely an opportunity to buy, but I think now people that were sitting on the potential to refinance and take care of that is also coming up and taking a look now. So definitely activity has picked up on both sides.
Good. Okay, well, and of course we're missing Patricia. She's busy off selling houses. So for those of you who expect to see her, sorry, but she's busy. And thank you for supporting her with the business. But she'll be back most probably next week. And Gustavo, thanks for your good work keeping those rates below 7%. We don't want them to go up any higher. So you did a nice job. And thank you for the research. Appreciate the information as far as the market. Any last words before we wrap up?
You know, I want to make sure that everybody continues to, just like, you know, we do our research, for them to do their research, you know, call, you know, ask questions. There is no, you know, bad questions, even after a second or third time, because maybe a different lenders will tell you different things. So it's always good to do your research and make sure that you get a hold of someone that can help you from start to finish, so that you can feel comfortable going through the process, because this is the biggest expense that everybody's going to be doing. You know, you're getting a loan for $400,000, $600,000, $700,000 or more. You want to make sure you understand what's going to happen over the next 2 or 3 years.
I think 100% right. And the last word I would say for today is anything in life worth working for, worth having is worth working for it. And so if you want to buy a house, you want to build wealth, you want to generate future income, let's roll up our sleeves, work together, reach out to Gustavo or Patricia or me, and let's get to work and help you achieve that goal. So I'm an escrow on a purchase, kind of an odd property. So I know the market's good enough to invest some money, and continuing to save for other real estate investments. So this is not me telling you to invest, but I'm along with you and pushing myself to get the work done. Gustavo, thanks for being on here today. Patricia, we missed you. We'll see you guys next week. And for the rest of you, reach out to us if we can help in any way. Make today your best day ever. Thank you so much, everybody.
Thank you so much, Bill.